from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, the Apple falls, why demand is slowing for Apple's most popular device. Plus, Omicron keeps popping up around the world, but there's a new treatment that could fight it. I'll talk to the maker behind that promising drug. And shoppers are scooping up all those one-of-a-kind gifts as we speak, but will they make it on time? The CEO of Etsy joins me to talk about how he's making sure everyone has a very happy holiday. We're going to get to all of that in a moment, but first let's get a look at the markets. And it was another volatile day. Our Ed Ludlow with us now. Ed, what did we see?
We went from the biggest two-day decline on U.S. equity since October 2020 to the biggest one-day jump in the S&P 500 since October of this year. And investors have a lot to take on board, right? Volatility associated with Omicron and what the Fed might do. But if there was a pocket of weakness or underperformance, it was in technology shares. You see that reflected in the NASDAQ 100, a very tech-heavy index, and particularly in the NYSE FANG Plus index, which was just in positive territory on Thursday. A lot of that, of course, to do with Apple, which we'll come on to. And on a day where we were really in risk-on mode, there was selling in cryptocurrencies pretty much across the board, which was interesting. Some other really important news, of course, came around US-listed Chinese companies. Now, I'm looking at the NASDAQ Golden Dragon Index, which at one point was down by the most since September, but pared back some of those losses to trade at its lowest level since May. Of course, the SEC coming out saying it has a plan to look at these Chinese companies that are listed in America and think about whether they fit the rules, the parameters of what is required to be a foreign company listed in the United States. Of course, we've got to talk about Apple. You talked about it in the intro of the show, notifying, according to sources, its suppliers that demand is disappearing. It's not quite there. And what we saw from some of Apple's key suppliers was it wasn't just Apple under pain, but if you look to some of its suppliers in Asia, for example, LG Innotek. LG Innotek gets more than 50% of its revenue from Apple, and it fell more than 8% in Korean trading. You saw that in Europe as well, of ST Micro and Infineon. So a lot to unpack there, because we went from thinking, oh, well, Apple can't make enough iPhones because of supply constraints, to no one wants to buy them anyway. That's a hard one to follow.
And interesting that they're saying demand is dropping now at a time when you'd think it would be spiking ahead of the holidays. I mean, what does that say about the iPhone?
Yeah, about losing patience, right? You know, I don't know about you. I've been doing some holiday shopping recently. You go onto any website, any e-commerce platform, and you look out of stock. We know from the Adobe data, out of stock messages up 260% from the same period in 2019. So there is evidence to suggest that you're logging on to buy something. It's not there. Don't even try and buy it. Don't wait for it, for sure.
Right. Always get those questions about whether folks buying it should wait or not wait, and, you know, case-by-case basis, right? I want to get to Bloomberg's Mark Gurman now, who's with us and has been reporting on this story. Mark, what can you tell us? Why is demand for the iPhone falling now of all times?
Yeah, I think that this is a combination of factors. One, we have a decrease in consumer spending. We see things like gas and food and other things that you want to buy on a normal basis increasing. People are trying to hold on to their money. We see it's been a while since the last stimulus check. So there are issues here that are preventing people from having that extra cash to buy a new iPhone, right? On top of that, the iPhone 13 is more of a modest upgrade over the iPhone 12 and the iPhone 11. There's not a whole lot of new here, but that was sort of covered up by long lead times, long lines at Apple retail stores, supply chain issues, as well as very aggressive rebates and discount deals from both Apple and the carriers, which made buying these new iPhones, even with minor changes, a lot easier to swallow than in years past.
So why are people holding off buying next year's iPhone? You know, I mean, I'm sure you get the question all the time. Should I wait or should I buy it now?
Right. I mean, I think it always depends, the answer to that question. It depends on who you are, what you need the device for, how old your phone is. There's so many factors. It's not a very black or white answer, right? I think personally, if you have an iPhone 12, there's really little reason to upgrade to the iPhone 13. I personally did it because I got the phone at no cost because of the rebate deals offered between Apple and the carriers. Again, even if you're coming from an iPhone 11, if you didn't think the iPhone 12 was worth the upgrade from the 11, there's really no reason to upgrade from an iPhone 11 to a 13. But if you have an iPhone XS, an iPhone 10 or earlier, I think it's a really solid upgrade for you. I also think there's a lot of people holding off to the iPhone 14. Everyone knows the way these Apple cycles and patterns with device upgrades works. You know that if there's a modest upgrade, the following year is going to be much larger changes. So I think people are holding off for the iPhone 14 as well. There's been a lot of discussion of foldable iPhones. So I think it's a combination of everything going on with the world, as well as this being a modest device upgrade and some of those carrier rebates starting to run out.
What does this mean for the overall Apple earnings and holiday story?
Well, the best thing I can tell you is what Tim Cook has already said. He said they're going to have a year-over-year increase in revenue for Q1. That means they're going to top 111.4 billion. Analysts are looking for numbers around 116 to 117 billion for the quarter. And I think Tim Cook wouldn't have said that number on the fourth quarter earnings call if he wasn't more than confident that this was going to happen. So I think regardless of the demand, regardless of the supply, you have to go with what Tim Cook said he's expecting. And he's expecting growth year over year. At the same time, that growth may not be as big as what Apple expected. They already said $6 billion decline from what they could have made in Q1 is to be expected because of the supply chain issues. Now we know there's some demand that fits into that picture as well as one of the reasons why this quarter may be very strong, but not as strong as it potentially could have been.
Okay, Bloomberg's Mark Gurman, thank you as always. And do not forget, you can subscribe to Mark's weekly Power On newsletter at Bloomberg.com. Now, in other news, U.S. antitrust officials are suing to block NVIDIA's proposed $40 billion takeover of chip designer ARM. The Federal Trade Commission says the deal would harm competition in the semiconductor market. In a statement, the FTC said the acquisition would give NVIDIA control over the computing technology and designs that rival companies rely on to develop competing chips. ARM is owned by the SoftBank Group and licenses its technology to all the major chip makers, including NVIDIA competitors. Coming up, we're going to be joined by Josh Silverman, CEO of Etsy. He'll debrief his meeting with President Biden to talk about supply chain issues and get the scoop on the hottest items selling on the online marketplace this holiday season. That's next. This is Bloomberg. Etsy, the global online marketplace focused on handmade and vintage products, is hot off the heels of the year's busiest shopping week. Shares of the company rose leading up to Black Friday and popped on news of the new Omicron variant, but has since retreated down over 15% over the last 7 days. In a blog post, CEO Josh Silverman shared his take on why traditional retailers are struggling to navigate supply chain pain and why he thinks Etsy is thriving despite it. For more, I want to bring in Etsy CEO Josh Silverman himself. So, Josh, you're coming off really busy few days. First of all, Black Friday through Cyber Monday. Talk to us about the trends you saw and how it all came off.
Yeah, the team spends all year getting ready for this period. So it's a really exciting period for us. And we're really pleased. First of all, we are not seeing a rise in out of stocks. I know you mentioned earlier in the show, seeing that in lots of other places. At Etsy right now, 50% of search queries have 1,000 or more relevant search results. And virtually all, about 95% of search queries have at least 100 relevant search results. We're not seeing any rise in out of stocks. We're not seeing any rise in stores going on vacation. And we're not seeing any rise in postal delays or things taking longer or arriving late. So we're really pleased with how things are going so far.
You also met President Biden at the White House earlier this week to talk about supply chain issues. What's your level of confidence that the administration is doing the right things to alleviate the supply chain challenges? What's going on at the ports?
So first, it's an honor to get to spend time with the president representing small businesses and in particular Etsy's 5 million sellers and make sure that micro entrepreneurs have a seat at the table. And the president does really understand the role of small business and is a passionate advocate for small business to make sure that we're looked after in this economy as well as everyone else. What I spoke with him about is the critical role of infrastructure to make sure that small businesses have a level playing field when competing against the big guys. And for us, really, that means things like the U.S. Postal Service, 1 out of every 4 Etsy sellers lives in a rural area. And our sellers rely on the U.S. Postal Service as critical infrastructure. The for-profit players can cherry pick the postal codes that are most profitable or the postal routes that are most profitable. The USPS is unique in having a mandate to have to serve every postal address in America. So we talked about the importance of making sure that the USPS is well funded and well supported. And I think the president does understand that and is supportive. The other thing that we talked about was broadband. That, again, 1 out of every 4 Etsy sellers lives in a rural area, and broadband internet access is still not ubiquitous in many areas. So we were really pleased to see, and we'd advocated for broadband support as part of the infrastructure bill. So happy to see that. And I would say the president was highly engaged in the conversation and really wanting to know what he and the administration could do to make sure that things were running smoothly.
Now, interestingly, I do shop on Etsy, and there were a number of things that I couldn't get from traditional retailers this holiday season that I ended up going to Etsy for. I think I've got a few things coming from Lithuania just in time for the holidays. How are the supply chain issues impacting Etsy sellers and Etsy itself?
So, the Etsy sellers tell us they're less concerned about the supply chain this year than they were last year. And thrilled to hear that you found great products from great sellers. We've got some wonderful sellers from Lithuania, by the way, selling really great. I won't be surprised if you were buying maybe linen or apparel.
Yes, indeed.
We've got great sellers from Lithuania who are doing that. What our sellers tell us is 95% of them are buying from within their own country. And in fact, in the United States, 47% of our sellers buy all their raw materials from within their own state. So their supply chain is very local and it's two-hand making. And because of that, we tend to hear less issues about the supply chain. We encouraged our sellers to stock up early. So most of our sellers were stocking up in July and in August and telling us that they felt really good coming into the holiday. Now, that's not to say that there aren't individual sellers who might sell out. But with over 5 million sellers on Etsy, if one seller sells out, it's really highly likely that someone else will be ready, willing, and able to step in and sell another great product.
Etsy has been a pandemic winner, but the stock has been dropping over the last few days since we learned about Omicron. What's your take on that? And what do you think this new variant means for Etsy and the trajectory?
Well, we live in a really dynamic environment, and so it's really hard to say, what new variants are going to be. And I'm not a public health expert, so I don't want to pretend to be a public health expert. What I will say is that this time last year, stores were closed, COVID was spiking, hospitals were overflowing, and many states were in a complete state of lockdown. And so during the holiday season, people really had very few choices, and they had to turn to Etsy as one of the few places that was reliably selling during the holiday season. Fast forward 1 year to the holiday season of 2021, and almost all stores are open. People are moving about very freely, and yet we projected in our guidance at the beginning of November that we would see a strong fourth quarter with robust growth on top of the 118% growth we had last year. So what that tells me is millions of people came to Etsy or came to Etsy more often over the past year, and they really liked what they saw. So even now with so much more choice, they're choosing to come back to Etsy again and again. And in fact, purchases per buyer, what we call GMS per buyer, is actually up 20% year over year, as we reported in the third quarter. We feel great about that.
The folks from Shopify were on the show earlier this week saying there's been a big shift to independent sellers. And I'm curious how much competition you're seeing from sellers going direct to consumer and using digital tools like Shopify instead of Etsy.
We don't really see it as a zero-sum game. What we find is many of our sellers choose to sell both on Etsy and in their own site. And in a lot of ways, it's the best marketing for Etsy because they often don't realize how hard it is to attract traffic and rise above the noise until they go and try to do it themselves. So each of our sellers individually is a blade of grass in a thunderstorm, trying to get attention from consumers, trying to get trust from consumers. And that's really the role of Etsy. Etsy's job is to build a brand that means something, that attracts tens of millions and now close to 100 million buyers who are coming because they want something that is artisanally crafted, that is handmade, that is made just for them because they want a connection with the seller themselves. And they trust Etsy as much as they, as anyone. And so we're able to attract sellers and view trust, and that makes everyone better. And that's really the role of our platform.
So just a few quick rapid fire questions, Josh, to get a sense of which way the winds are blowing. What's the #1 holiday gift so far selling on Etsy this season?
There's a bunch of things that are selling well, but the big trend right now is actually people getting together in person. So we're seeing things like barware and things to have a drink together as a family. Family jammies, so family pajamas getting matching set are very popular right now. And then tablescapes. So for example, place settings are up 72% year over year. So things that are about being together in person are really on the rise, which is wonderful.
So that makes sense given the tablecloths that I've just purchased from Lithuania for a holiday gathering.
It's all coming together.
Speaking of what country do you see the most purchases in? And if it's the United States, what country outside the United States?
The United States is indeed #1. The UK has been phenomenal. Etsy has really come into its own in the United Kingdom since the beginning of 2020 and has become a real household name. And that's really exciting for us. We're also making great progress in Germany, which is another market with just enormous potential.
And what is your most searched item overall, holidays aside?
So during Cyber 5, we were seeing 200 searches per second, and gift and personalized gift were the two searches that were the most common. And so what that says to me is people are really coming to Etsy to find something that's made just for them, or made just for the recipient of the gift. And that's something we think Etsy uniquely provides.
And speaking of the word unique, I'm seeing more and more unique items on the site. What would you say is the most interesting thing you sell?
Oh gosh, we could go for hours on that. I would say a trend that's really hot right now are name puzzles for kids. So a handmade wooden puzzle that has your child's name on it is really popular. If you were going to go to the weird and esoteric, we could be here all night. It's a treasure chest of all sorts of things.
All right, Josh Silverman, CEO of Etsy, thank you so much for joining us, giving a view of what's happening on there over the holidays. Coming up, Grab goes public, Southeast Asia's biggest ride-hailing and delivery company, falling sharply on its first day of trading. Concerns about whether they'll turn a profit. I spoke to the co-founder of Grab about when she thinks they will start making money. That is next. But before that, let's take a quick look at Snowflake's shares surging a day after the software developer posted results that largely topped analyst estimates. The stock move was the biggest advance in almost a year and more than doubles Snowflake's gain for 2021. This is Bloomberg. Grab goes public, the Southeast Asian ride-hailing and food delivery giant hitting the public markets in a $40 billion SPAC deal, trading under the ticker Grab. Investors, however, seem skeptical as the company closed down 21% from the SPAC's last close on concerns about whether Grab will ever be able to turn a profit. I spoke on Bloomberg Markets with Huiling Tan, Grab's co-founder. Take a listen.
We chose the path that enabled us to get to the most important objective first, which is to get the best investors for our day one cap table. And with that, based on our PIPE investors that were attracted to the long-term growth opportunities that we've seen, and the very low redemption rates that happened during the de-SPAC process, we are actually extremely happy with the outcomes that we've achieved as well.
You've turned Grab into a super app, including delivery, payments, but also, of course, ride-hailing. How worried are you about a resurgence of COVID and Omicron right now?
So I think a critical part of Grab's growth trajectory over the last 2 years has been our super app strategy that has enabled us to be very resilient to the COVID challenges. To share a bit more about what it is, think about Grab as Uber, DoorDash, and Venmo all in one. Now, from the day when it starts, when you wake up all the way when you go to bed, you're able to get your breakfast, pay for meals, send your friend gifts, buy groceries, and more. And why that is really important is because it enabled us to have things like shared fleet strategies with our largest driver partner network in the region, which enables our drivers with their super apps to decide if they want to transport people, deliver food or groceries seamlessly in the app, and therefore enabled us to very quickly pivot from mobility to deliveries over the last 2 years. Now, with this super app strategy, we're very confident that we can continue to serve the needs of Southeast Asia's users and our partners, despite whatever challenges COVID continues to throw at us.
All right. Still, though, losses widened to $988 million in November for the third quarter. Revenue also declined slightly. When do you expect Grab to become profitable?
So a bit of context, a large portion of the last quarter's results were because of non-cash expenses. There were more than $700 million of it, much of which will actually no longer be required with the de-SPAC that we just went through. Now, for us, the other important thing is that growth and profitability are not mutually exclusive. And you've seen that consistently from us over the past few years, where we've consistently developed very high top-line growth while also making very significant progress on our bottom-line profitability. For example, our mobility segment is already segment EBITDA positive with market-leading margins. Our deliveries business, which is a very young business, only 3 years old, also is EBITDA segment positive for various markets that we have. Ultimately, for us, what matters in our portfolio allocation strategy is that we will continue to invest into areas that we see huge, tremendous opportunities in and very strong momentum behind.
Huiling Tan there, co-founder of Grab. You can catch the full interview at Bloomberg.com. Meantime, the rapid grocery delivery startup Joker raised $260 million in new financing from investors. The company now has a $1.2 billion valuation. Joker aims to bring customers groceries and other consumer goods in just 15 minutes. It operates about 200 micro-fulfillment centers across 15 cities. Coming up, it was first detected less than 2 weeks ago, but there's already a new drug that's showing promising results fighting Omicron. The CEO behind this new treatment joins me next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Volatilities have been back this week as news and cases of Omicron spread around the globe. Our Ed Ludlow here with the market reaction. Ed, tell us more about what you're looking at.
Yeah, it's interesting. I want to focus back on the S&P 500, right? Because over a 2-day period, we had the biggest drop over 2 days since October of last year, and then stocks kind of rebounding broadly during Thursday's session. But I remember back to Friday when we first started to get details of the Omicron variant, and investors saying, well, we need more data. We need to understand where the cases are, how they're working. And this is at a time where the data broadly is not great, right, when it comes to COVID. Coming me into my Bloomberg terminal, and let's use New York City as an example. New cases, daily cases, are now back at their highest level since January. That's a great chart to track, and it kind of shows the curve of how COVID cases have been operating in major cities. It's, of course, winter, and it's hard to track. And the other part of the news cycle, of course, we're looking for is treatments. We want to know about vaccines. We want to know about possible treatments. So it was interesting to hear that news about Vir on Thursday, a partner of GlaxoSmithKline, of course. The shares absolutely surged in pre-market, up 20% on news that their COVID-19 antibody treatment was effective provisionally against Omicron. But then we opened in regular trading, we're up 12%, yet by the end of Thursday's session, we're down 2%. So investors are living with this volatility. They're living in the moment, taking in the headlines from the world of COVID-19. But what they really want is the data. What they're really asking for is, how much do we know about this variant, and what is the solution?
All right, well, we're going to talk more about data right now. Ed, thank you. I want to stick with the news of Vir and its COVID-19 treatment and bring in the company's CEO and Director of Biotechnology, George Scangos. George, thank you so much for joining us. So you've got promising new data on a new COVID treatment. Tell us what you discovered and how did you find it so quickly, given that this variant is so new to us?
Well, it's not new since the Omicron variant. This is an antibody sotrovimab that we started working on in February of 2020 and was approved provisionally approved under emergency use authorization in the US, and now is approved in many countries around the world to treat COVID-19. And it does reduce hospitalization by 79% in the phase 3 trial. So it works quite well. As new variants arise, we and other companies who make antibodies, I'm sure, test the new variants to see if our antibodies still will retain the ability to neutralize them. So we've done that for every variant that's arisen, alpha, beta, gamma, the whole litany of Greek alphabet strains, including delta and mu, and our antibody continues to be able to control them. The Omicron now, which has only been available now to be examined for a couple of weeks, you can look at the DNA sequence and you can tell whether there's something in there that tells you your antibodies are unlikely to work. And you saw maybe announcements from other companies that their antibodies were unlikely to work. When we look at it, we see the mutations that are in the Omicron variant. We've tested most of them, almost all of them, individually. We know that our antibody retains activity against all of them. And what we don't know is when you put them all together in the same virus, whether we will retain activity. We expect that to be the case, but until we demonstrate that experimentally, we have to caveat that a bit. Right?
So right now you've been doing most of this testing in a lab, as I understand it. Are you going to start testing this on humans, actual human cases of Omicron?
Well, yes. I mean, it is being used in the US and in many countries around the world. It is one of the 3 antibody treatments that has been purchased by the US and is being shipped to places around the country. And as Omicron continues to expand in the US, if that does happen, then of course we'll have data on Omicron. And we are working also with authorities in other countries, South Africa, for example. We would like to get our antibody tested there as well, just to confirm.
Given this promising news, I mean, is the United States government potentially expanding its purchase agreement with Vir for more of your treatment?
I think right now, we are optimistic about the ability of sotrovimab to contain the Omicron variant. We will have data to confirm that, or not, but hopefully to confirm that within weeks. And so I think once we have those data, I anticipate there'll be a lot of interest from governments all around the world if we have those data.
Now, President Biden today announced some new measures to fight COVID in light of Omicron. Let's take a quick listen to what he had to say.
We're expanding our national booster campaign to provide booster shots to all eligible adults. Our docs and the scientists believe that people who get a booster shot are more protected than ever from COVID-19.
Do you think that what the U.S. is doing now is enough?
No, I think he's right. Everybody should get vaccinated. All vaccinated people should get boosted. That's the best thing we can do. If everybody in the country did that, we would have much less of a problem. I think we need much, let's say, more drastic remedies here. Not necessarily social ones, but we do need social ones. Masking is a good idea. I don't understand the controversy. It's not that big an imposition, and it does reduce transmissibility. But distribution of drugs, distribution of the antibodies, distribution of test kits. I think that was also part of his announcement, to make test kits increasingly available. All that should be done. All that, and there needs to be close coordination with, I think, with the industry and the government. This new Omicron variant that has everybody so upset probably is not the last one. right? There'll probably be other variants that come down the pike, and we need to be ready for them. And we know enough now to know how to be ready for them. And so the industry, biotech industry, pharma industry, and the government have to come together and work carefully, as they have been, but I would say in an expanded way, to make sure that not only we get COVID under control, but that we're prepared for whatever the next pandemic is.
All right, George Gangos, thanks for giving it to us straight. CEO of Vir. We'll be following how your treatment and some of that new data plays out. Thank you. Coming up, teaching Mandarin to kids around the world. The Singapore-based ed tech company Lingo Ace is gaining momentum in the midst of a massive crackdown on Chinese ed tech companies from Beijing. We're going to speak with a company executive about plans to expand and get a read on U.S.-China relations. This is Bloomberg. Well, it's a surprise promise that aligns the world's biggest automaker with the world's most ambitious climate plan. Toyota is vowing to sell only zero-emission cars in Europe by 2035. The company also set a new intermediate goal for at least half its sales in Western Europe to be zero-emission vehicles by the end of the decade. Well, with the Chinese crackdown on tech companies and foreign IPOs, and now the U.S. government inching closer to kicking Chinese companies off U.S. stock exchanges for not complying with Washington's disclosure requirements, where do U.S.-China relations go from here? Whatever the answer, better communication and understanding is critical. One global edtech company thinks it has a role to play. Lingo Ace is a platform teaching Mandarin Chinese to kids in the U.S. and around the world, and just announced $160 million in new funding from Sequoia China, Tiger Global, and more. Lingo Ace's CFO and Chief Strategy Officer Marshall Roslin is here with me now. Marshall, thank you so much for joining us.
Great to be here.
In town from Singapore.
In town from Singapore.
Where
Great
you're
to
based.
be in the studio.
Thank you. So you just raised $160 million. How do you plan to use this new funding?
Yeah, well, I mean, we're super excited about the funding, first of all. And really, it's happened over the course of both a Series B and a Series C round, just over the last 9 months. We're a business, as you said, that we feel like we're playing a really important role right now in the world, enhancing communication by teaching Mandarin to kids across the world. Right? And with the investment now that we have some of the leading investors in the world. And just a small correction, it's actually not Sequoia China, but Sequoia in the region based in Singapore. So Sequoia in Singapore and India, Tiger Global, Owl Ventures, folks that are not only some of the top investors in the world, but also some of the top investors in edtech. So what people may not know is that Tiger Global was one of the first investors in some of the top education companies in the world almost 15 years ago. Owl Ventures, the largest ed tech company in the world, largest ed tech venture fund in the world. Now, in terms of where we're going to spend the money, okay, the U.S. market is the largest market for our business. And so we, as any company now in the tech sector, right, knows that talent is key. And so we've just started building our team over the last several months. We have over 20 people here in Silicon Valley. We have an office here. I was really excited to be with the team just over the last couple of weeks, working with them in person. And we're looking to scale that, our operations here in the coming months. In addition, we're also going to be looking to enhance our learning experience. Mandarin is an incredibly hard language to learn, as everybody knows. And so we're making it fun and interactive through technology and creating a really immersive experience for all of our kids. And so we're going to continue to invest to make sure that we're putting the best products out there. Any plans to expand beyond Chinese? Absolutely. So in fact, we've already launched English in Southeast Asia. You mentioned the EdTech crackdown, in China to start. There are a number of companies that have been teaching teaching English globally and actually focused on the English market for China. That can't happen anymore. And now, again, when it comes back to talent, we have a tremendous opportunity now to take advantage of some of the hole in the market now to be able to recruit talent that's really been building the largest scaled English language learning companies in the world and be able to target Southeast Asia and other markets across the world. So this crackdown in China on edtech has been catastrophic for a lot of edtech companies. That's right. In the region. Has that benefited Lingo Ace? Yeah, I mean, I think it's early days to say that this has happened over the last few months now. I mean, look, as the the head of Goldman Sachs' education franchise in the Asia Pacific region for the last few years, I covered all of these companies, right, and was working on a number of IPOs before leaving to join LingoAce. Catastrophic, is a strong word, but these companies have literally had their markets and the opportunity basically evaporate for them. So they have to shift, most of them have to shift their business models right now. And I would never count them out. They're going to adjust and they're going to look for new opportunities. But we do see this overall being a net benefit for our business as we continue to expand and recruit talent.
What do you think of that, given that you worked at Goldman for so many years in San Francisco and Hong Kong? What do you think of the crackdown on tech by the Chinese government? Who wins, who loses?
Yeah, I mean, look, I think at this point in time, Emily, there's a lot of changes happening in China. There's a lot of reforms. And clearly, the government is looking to focus the human capital and the financial capital in the technology industry in China around certain core verticals and certain areas where they want there to be further growth. So I don't think the technology industry necessarily is going to not exist in China. I mean, of course, they're going to continue to innovate. They're going to continue to build new business models. But I just think it'll be focused in different areas going forward.
Now, I recently spoke with Kai-Fu Lee, longtime tech executive, worked in both China and the United States. He had this to say about how he thinks this crackdown will play out. Take a quick listen.
Sure.
It's likely that the Chinese AI companies will see China as the primary market. The US AI companies will probably not be able to get into China, and Chinese AI companies probably won't be able to get into the US. This is not necessarily my preferred situation, but the geopolitics is such that their Chinese AI companies will sell to China, American AI companies will sell to the US, and they'll both compete in other parts of the world.
Meantime, you have this tit for tat playing out between the U.S. and China, China making it more difficult for Chinese companies to go public in the U.S. and other foreign countries,
Sure.
The U.S. now doing the same to Chinese companies. How does this end?
Well, I mean, it's a really interesting commentary from Kai-Fu Lee, because what he's talking about in AI, it could be said is happening across other segments of the technology industry as well. But what we say is, for our business, being that we're based in Singapore, right, and serving a broader global market, it's a really interesting opportunity for us. I think we're really special because we're able to leverage a lot of the innovation and the business models that are being developed in Asia more broadly, being able to bring that innovation to the rest of the world in really interesting ways that, as Dr. Lee said, many companies won't be able to do. And that's across ed tech, that's across AI, that's across many parts of the technology ecosystem.
So with U.S.-China relations entering a very tense chapter in global history, where do you think it goes from here?
Well, look, I think as President Biden and Xi Jinping discussed a couple weeks ago in their meeting, their virtual meeting, I think we all recognize that China is increasingly important in global affairs and will continue to become increasingly important. And that's not just a US-China story, that's a global story. Every country around the world is looking to adjust to this changing dynamic. At the end of the day, what we're trying to do, not only by teaching Chinese, but also teaching English and potentially moving into other verticals as well within the education ecosystem, is really to build bridges, build understanding. And we see, we've grown 4,000% in the last 2 years. I mean, we've literally, kind of gone from nowhere to being a very sizable business. And I think what we see from that is just the demand from, by the way, over 100 different countries for families that are looking to invest in their children's future so that they do have the ability to build these connections and build better understanding.
It's a coincidence that you're here today on the same day that Grab went public, also a Singapore-based company. Curious, what sort of sense you can give us of the pulse of tech innovation happening in Singapore. It is one of the fastest growing economies in the world, one of the fastest growing digital economies in the world, and there's a lot to watch. Yeah,
so it's fascinating. So I just moved with my family from Hong Kong to Singapore 5 months ago. And just to see what's happening there in terms of the amount of capital and innovation that is coming into the market, part of which, by the way, is because Singapore sits in the middle of the East and West, right? And so it's benefiting a lot from a lot of these trends. And I think Grab is a great example. I mean, as you discussed earlier, of being a new model that may not fully exist, frankly, in the United States.
A super app doesn't really exist.
Exactly. And so I think for the last several years, anybody in Silicon Valley recognizes that Asia is not only innovating from a technology perspective, but also from a business model perspective. And so we're seeing that with Grab. We're seeing it with a whole host of other companies across Singapore. And it's really exciting to be part of building that ecosystem.
Well, we'll be watching to see if we see it with Lingo Ace. Thank you. CFO and CSO, Chief Strategy Officer, Marshall Roslin. Thank you.
Great to be here.
All right. Coming up, stablecoins explained. We're going to talk about why investors and now governments are paying close attention to this particular brand of cryptocurrency next. And as we head to break, let's take a look at DocuSign. Shares tumbling in extended trade after the company gave a revenue forecast for the current period that missed analyst estimates. It is stoking concerns about whether the e-signature company can continue to grow as businesses resume in-person operations. This is Bloomberg. In the latest out of Washington, the House passed a stopgap funding bill to keep the government operating past Friday. The bill is now being sent to the Senate, where a group of Republicans threatened to delay action over objections to federal vaccine and testing mandates. The vote was largely along party lines as House GOP leaders urged their members to oppose the measure, which would fund U.S. government agencies at current levels through mid-February. The temporary funding bill now faces a potential slowdown in the Senate that could trigger a brief weekend shutdown. Goldman Sachs is exploring Bitcoin-backed loans, according to CoinDesk. CoinDesk reporting the bank is leaning towards synthetic crypto products like futures to avoid touching the cryptocurrency directly. Goldman saying it expects more traditional financial firms to pile into the rapidly growing asset class. Earlier this year, crypto-friendly banks Silvergate and Signature both announced Bitcoin-backed cash loans as well. And let's go from Bitcoin to the rise of stable coins, considered the backbone of the crypto universe. Bloomberg Quick Takes' Eddie Vanderwalt explains why not just investors, but also governments are now paying attention.
The sheriff is about to take on crypto's Wild West. Imagine being able to print dollars on US soil and doing so without being regulated. Stablecoins are part of the backbone of the cryptocurrency universe. Together accounting for $120 billion, they're used as a place to park your money when Bitcoin, Ether, and other cryptos are volatile. Some investors use them as saving accounts or for posting margin for trading digital assets. What they all have in common is that they try to hold an unchanging value in reference to some other real-world currency, like the dollar or euro. And until now, there's been very little oversight. The biggest, Tether, said until 2019 that for every one of its units outstanding, it held $1 in reserve. Then, in February of that year, it said it may also be backed by cash equivalents and other assets. That makes it like a money market fund, except that it doesn't have to publish which assets it owns, as regulated funds do. The problem is that this can create a feedback loop into the real economy. If there's a run on Tether, it may have to sell its money market instruments, which may create a liquidity crunch in other debt assets. And that could create a systemic risk for financial markets. This is why the US Securities and Exchange Commission is paying attention. Chair Gary Gensler has taken a hard line on cryptocurrencies in general. He's part of the president's working group, along with Jerome Powell and Janet Yellen. But New York Attorney General Letitia James has gone further. In February, she required Tether to end all trading activity with New Yorkers. Tether's claims that its virtual currency was fully backed by US dollars at all times was a lie, she said. So right now, the sheriffs are looking for a fight, and the Wild West is about to be tamed. I'm Eddie Vanderwalt. This is Decrypted. For more content like this, follow us on your favorite platforms.
Bloomberg Quick Takes, Eddie Vanderwalt there. All right, and that does it for this edition of Bloomberg Technology. Make sure you tune in tomorrow. We're going to have much more on crypto with the CEO of OKCoin, Hong Feng. Plus, we're going to be joined by the CEO of Boardspan, Abby Alderman, and Race Capital General Partner, Edith Young. I'm Emily Chang in San Francisco. This is Bloomberg.